every fair value gap has a different probability of holding. And by the end of this video, you will know how to find the best fair value gaps. Now, there are 3 phases to it. We have the before, the during, and after. The before phase is very important because before diving into the during phase, where we're going to understand what the fair value gap should look like, we need to understand why the fair value gap was formed. In other words, the goal of the before phase is to see if we have visual evidence that this fair value gap could potentially hold. This visual evidence is seeing if previous fair value gaps have been respected or disrespected. Disrespected means that both bullish and bearish fair value gaps are not holding. This, like we see right here, usually manifests itself as a consolidation. When we have been disrespecting fair value gaps, the fair value gaps itself are unreliable, and this is what you want to avoid. Instead, we want to see if fair value gaps have been getting respected. Respected is what we see right here. Fair value gaps have been creating new fair value gaps right here. This means that we have visual evidence that fair value gaps have been holding. That makes this new fair value gap right here higher probability. Throughout this video, we will compare these 2 fair value gaps. And with the 3-phase process, by the end, we will know which one of these 2 fair value gaps is the highest probability to trade from. US dollar CHF, before creating this daily fair value gap, has been respecting a weekly fair value gap sitting right here, which has created 2 new fair value gaps, and this recent weekly fair value gap that we retrace back into then creates the new daily fair value gap that we are looking at right here. Now, if we compare that to gold, before creating this daily fair value gap, we were already respecting another daily fair value gap right here, and we were also respecting 2 weekly fair value gaps. So gold has more and a better visual evidence because it has been respecting more fair value gaps. Now that means gold is currently leading the race over US dollar CHF. But this is only the start, because the next phase, the during phase and the after phase, are arguably even more important. Now the during phase is all about what the fair value gap itself looks like. More specifically, the third candle of the fair value gap. If it's a good third candle, that means it's a better fair value gap to trade from, which we can then profit from in the next phase, the after phase. So before diving into the good third candle, first you need to understand, to avoid them, the bad third candles. The first type of third candle is what we see right here. We have a large expansion in the second candle of the fair value gap. At this moment in time, we are not sure if the fair value gap is going to even be created in the first place. But with a large expansion like this could be the potential fair value gap in theory. Now, when the third candle opens right here, we see it comes all the way lower right there, only leaving a little bit of the potential fair value gap that we could have had. Now, what this means is that this third candle is a rejection candle, meaning that there's a lot of bearish momentum against our bullish trade ID right here. This is not good when you have that much momentum going against your trade ID. So what this third candle usually turns into is a fair value gap that really struggles to push price higher and then either consolidates or even continues lower. Now, the second type of third candle that you can have is where we have too much momentum in our favor. This is what happens when we have an expansion phase like that, so the second candle of the fair value gap, and we have a new expansion phase candle, so we close above the second candle high, creating a new potential fair value gap sitting right here. That means that this previous fair value gap that we have right here turns into a breakaway gap, where we are more likely to first reach the target right there before we retrace back into those fair value gaps. So too much momentum in our favor is also not a good thing. And then too much momentum against our trade is also not a good thing. So we need to find a balance. And that balance is what we see right here on gold and US dollar CHF. It's not a rejection, nor is it a breakaway gap. It creates a perfect third candle consolidation. And that's exactly what we're looking for. But the after phase will give the true confirmation if that fair value gap actually wants to hold. Right now, gold is still leading the race. Gold won the before phase, and the during phase is arguably a tie because they both have similar third candles. To determine the true winner in the after phase, there is 2 types that we are going to look at fair value gaps and candle signs, which are essentially the same thing. At the end of this video, I will share a PDF with the process of the 3 phases for free, so you can also use it in your own trading. Candle signs is where we take a look at one singular candle, like here on USD/CHF, and based on that candle, we can understand what the next candle most likely wants to do. Now, based on candle signs, this one singular candle can already allow you to look for an entry right there. Since this one singular candle and every candle that you're looking at in the market is made up of fair value gaps. So this is a daily candle. Now, if you were to profit from it on the 15-minute time frame right here, you would look at fair value gaps. The long wick at the bottom that we saw on the daily time frame from the daily candle is made up of those 15-minute fair value gaps first going lower to then fair value gaps going higher, indicating a reversal. Now, the same process applies right here on the 15-minute, where we first have a respect of this fair value gap right there. That fair value gap starts to create new fair value gaps that we can eventually look to enter from to then target higher. Now, the rejection, like we see from the daily fair value gap, is there. So is this a good after phase? Well, we need to compare it to gold. Gold, like we discussed, also has that good third candle. But what we actually see right here is that we don't trade back into the fair value gap directly. It takes 2 more candles. Now, that in itself is not necessarily a bad thing, but what we do see is because we first went higher to then lower, this led to an aggressive down candle right there. In other words, there's a lot of bearish momentum against our bullish trade ID right there. So when that momentum is destroyed, what you'll see is that we get no accuracy to those fair value gaps on the lower time frame anymore. So we'll see a lot of deep retracements into those fair value gaps, create an ugly confirmation. So between gold and USD/CHF, which one would be better for an entry and thus be the better fair value gap? USD/CHF, since in the last phase that momentum got destroyed on gold, making it overall harder to look for an entry. First link in the description for your own free PDF where the 3-phase process is outlined. All right, perfect.